Today we are going to talk about chapter number 11. Uh, Chapter number 11, if you remember, it's about current liabilities. Okay, so I have selected a question for you. It's from your book. It's a comprehensive problem 1125 2A, and it's about generalizing and posting liabilities. So some of the information is given to us. For payroll calculation, use the following tax rates and round amounts to the nearest cent. Okay, so OASDI is 6.2% on the first 132,000, which is basically a social security tax. Medicare is 1.45 up to $200,000, and 2.35 on earnings over $200,000. So for example, if somebody is making $250,000, you're going to calculate this social security tax up to $132,900. Your Medicare tax will be two steps. The first $200,000 you will calculate based on $1.45%, and the next $50,000 would be calculated based on 2.35%. And employer, this is for the employee, and this one is for the employer part. Means it will be, if you are an employee, this much will be deducted from your paycheck. And for the employer, again, employer also has to pay 6.2% on the first 132,900. Medicare 1.45%, FUTA 0.6% on the first 7,000 earned, and SUTA 5.4% on the first 7,000 earned. So in this question, the general ledger of Seal and Ship, the company name, at June 30th, 2024, the end of company's fiscal year. You may remember there are two kinds of end of the year. One is called calendar year, and one is called a fiscal year. Calendar year, in which that we calculate from January 1st to December 31st, and a fiscal year could end in June, in September, in March, in February. It does not follow the regular calendar year. So fiscal year, for example, I can tell you that Walmart fiscal year starts on February 1st. The calendar year starts on January 1st, but it starts on February 1st and end on January 31st. So the data has given to us here in this question is accounts payable is 114,000, interest payable is 0, salaries payable is 0, income tax payable is 0. All this information is 0, and we have an unearned rent revenue. As you know that unearned revenue is a liability, that's why it's listed with other liability 7,200, and the long-term notes payable, which is not a current liability, it's a long-term liability of 210,000. Let's see what they are asking us to do in this question. And the additional data needed to develop the payroll and adjusting entries of June 30. So why we are doing it? Because since their end of the year is January 30, 2024, we are basically closing the books, and July 1st, 2024 would be the first day of the next fiscal year or business year. Okay. So the long-term debt is payable in annual installation of $42,000, with the next installment due on July 31st. So on July 31st means 1 month later, you have to pay $42,000, which is an installment of the long-term debt payable that we have talked about over here, $210,000. On that date, Seal and Ship will also pay 1 year's interest at 9%. So they will calculate the interest based on the balance, $210,000. Interest was paid on July 31st, so the interest would also be paid with the 42,000. Make the adjusting entry to accrue interest expense at year end. So we'll have to calculate the year end expense. In part B, we're going to pay gross unpaid salaries for the last payroll of the fiscal year was 4,700. So these are the salaries that the employees of this company Seal and Ship has already been earned, or the expense the salary expense for Seal and Ship has been incurred. Assume that the employee income tax withheld are $910. So this is the federal income tax withheld, and that all the earnings are subject to OASDI, which is Social Security 6.2% that we have talked about earlier. So you will memorize after doing a couple of questions. Record the associated employer taxes payable for the last payroll of 4,700. We have to do that again. And unemployment compensation taxes, and we have to calculate the unemployment compensation taxes, the FUTA and SUTA, which is 0.6% and 5.4%. On February 1, the company collect 1 year's rent of $7,200 in advance. So on February 1st, they have collected rent. So we want to know how much we have earned and how much is still a liability. So requirement, using T accounts, open the listed accounts and insert the unadjusted balance as of June 30. So the first thing we have to do is to open these accounts as a T accounts, and we have to calculate the unadjusted balance of these accounts. Okay. So using T accounts, open that. So I'm going to use a page here. So this is a requirement. So I'm just going to put the question PF 11-32A, and this is part 1. It says using T accounts, open the interest. So first we have to, the first thing we're going to do is the interest expense. Why we are doing interest expense? If you look at part A, it says the long-term debt is payable in annual installment of $42,000. This is your principal, with the next installment is due on July 31st. And on this day will also pay 1 year of interest at 9%. So we have to calculate the interest expense, which is our principal of $210,000, and we multiply by 9%. So let's see how much is going to be. 210,000 multiplied by 0.09. So that 18,900. And now we have to pay this for the 11th month because it's due in on July 31st, which is 1 month less. So it is 18,900. So we have to pay for, since it's due, so we are on June 30th, it's due on 7/31st. So we are paying the interest in advance. So we are going to pay the interest on July 31st. So we're going to count from July 31st all the way to the 6/30 of, so this one is 2024 and this one is 2025. So we are paying for the 11th month. So we multiply this by 11 over 12. So multiply by 11 divided by 12. So that would be 17,325. So this is our interest expense of 17,325. Now the second part is, it says that make the entry to accrue interest expense at year end. So what would be the entry that we're going to make? So the entry would be debit interest, so that's the journal entry, interest expense for 17,325, and we're going to credit interest payable of 17,325. Since it is due 1 month after the end of the year, it will be considered a current liability. Okay. The second thing they're asking us to do is, gross unpaid salaries for the last payroll of the fiscal year were 4,700, and assume that the employee income tax withheld is 910 and dot all earnings. So we do not have to make a journal entry for Part B. No journal entry needed, because they have already recorded this as the salary they need to pay. Now we have to calculate the part where it says assume the employee income tax held at one and that all earnings are subject to 6.2%. So we have to calculate 6.2% based on that. So how much employee income taxes? Okay, so we already know federal income tax withheld is $910. They have already given us the example. Now we have to do OASDI, which is 6.2% of $4,700. So the 6.2% of $4,700 would be equal to $291.40. So that is $291.40. Okay. The next thing we have to calculate is the Medicare, FICA, Medicare, and the Medicare is 1.45%. So that would be 1.45% of 4,700 equals to $100. So that would be $68.15. Okay, and so we have, these are the three taxes that we need to calculate. So what the journal entry that we need to make here is, we will be making is debit salary expense of $4,700, and then federal income tax withheld is $910. We have OASDI is $291.40, and we have a FICA Medicare is $68.15. Okay, so how much should be the salary payable besides these? So so we're going to credit salary payable would be the difference of these numbers, and I'm going to show you why we're taking this number. So 4,700 minus 910 minus 291.40 minus 68.15, so that would be 345 cents. Now this represents your gross salary, this represents your deductions, and this represents your net pay take home. So even though that one person or multiple people have a gross salary of $4,700, out of that $4,700 they have to pay for that income tax, which is like federal income tax, Social Security, and Medicare, and this will be their net payable and net pay. So that's why we're calling the salary payable that we will be paying to the employees. Okay, So let's do the payroll tax expense for the so this is for the employee part. Now what we're going to do, employer do not have to pay the federal income tax. That's the responsibility of the employee. AOSDI, which is Social Security and Medicare, whatever the employee is paying, the employer also has to match. So basically 6.2% is going from the employee's paycheck and 6.2% will come from the employer. So payroll tax expense, it's called payroll tax expense, and it's OASDI 6.2%, same amount, $2,291.40, and Medicare of 1.5%, which is $68.15. So that will give us the total of $359.55. All right, so this is the journal entry we're going to make. We're going to say debit payroll expense, and we're going to credit these two things. Okay, now we have to do the next part, unearned revenue. Unearned revenue as of, according to this question, February 1st, as of February 1st, 2024. All right, so here is February 1st, 2024, and today we are on 6/30/2024. So this is February, sorry, February 1st, so it should be 2 first, sorry. February, March, April, May, and June. So how many months passed? 1, 2, 3, and 4. So on this date, you had taken a $7,200 cash in advance in order to let somebody use your property, but since 4 months have passed, so you have earned 4 months. So this one is for $7,200. That was for one month. So for each month it would be $600, and you have already earned 4 months, so you have is $2,400. So you can say that debit interest, sorry, rent, sorry, debit unearned rent revenue of $2,400, and you're going to credit rent revenue of $2,400. So that will be, so now you have earned rent revenue of $2,400 in this month. Do you remember what journal entry you have made over here when you receive this? That will be debit cash $7,200, and you credit unearned revenue or rent revenue for $7,200. I'm sorry, the room was not enough. So that will be the entry you made on February 1st. And this is the entry you are making on June 30th, because 4 months has passed and you now have earned 4 months of rent. All right, so now let's see what is the next next requirement that we have to do. It says prepare the current liability section of the balance sheet as of June. So here we're going to do that. So we're going to say current liabilities and this is part of the balance sheet. So here you go, balance sheet as of June 30th 2024, and of course there is a big liability, and then the current liability, and then what we're going to have under current liabilities is our accounts payable. And now I'm not creating this accounts payable was provided to you in the beginning of the question, that is $114,000. Interest payable, and but before interest we have to add current portion of this portion of long-term notes payable is how much we are paying. We are paying them $42,000. And interest expense that we have calculated, which is, we have just calculated interest expense of 17,325. So that would be 17,325. And then we have salaries, interest payable, not expense payable. And then we have a salary payable of $3,430.45. $3,430.45. And then we also have employee income tax payable, federal income tax withhold of $910. So basically employees holding this money on behalf of the federal government, so they have to transfer this money to IRS. And then we also have a FICA and Medicare that we have calculated. The FICA we have calculated was $291.40 for the employee and $219.40. So that we're going to add here $291.40 plus $291.40 and $68.15 here, and plus $68.15 because it's an employee and this is an employer portion, but both portion has to go to the Social Security Administration and Medicare Administration. So that will be $582, and this one will be $136. And since we have a total of $7,200, we have earned $2,400, so we still have a unearned revenue of $4,800 that we're going to earn over the next 8 months. So we have an unearned revenue of $4,200. So that gave us a total of $182,584 worth of current liabilities. You notice that we are talking about current liabilities. That's why we did not use the remaining part of $210,000 of long-term note payable, because that will go to a long-term liabilities portion. Okay. If you have any questions regarding this video, please feel free to contact me, and I will be posting these pages, scan these pages and post it for you as soon as possible. And thank you for watching the video. Thank you.